Want to identify where institutional players might protect their positions? Let's look at the defense leg concept from AlgoBox. A defense leg begins with a strong directional move supported by a notable delta spike, often around 1,000 or more, forming a clean, relatively straight leg on the chart. This move is then marked manually into a defined price zone, typically colored based on direction. The combination of a sharp delta imbalance and a smooth price leg is what identifies a potential defense leg area. When a significant amount of order flow concentrates through a clean, straight leg, it may suggest that larger participants accumulated a position in that zone. The theory is that those participants are unlikely to accept a loss, and if price returns to the zone, they may defend it by absorbing opposing pressure, often trapping retail traders offside before pushing price back in the original direction of the institutional momentum. Marking a defense leg involves translating order flow into structure. Traders first locate a strong delta spike and define its beginning and end across the sequence of bars. This bar-based range is then extended vertically onto the price chart, creating a zone that encompasses the price activity during that imbalance. The zone is typically color-coded, green for bullish delta and red for bearish delta, helping visualize directional intent. As price returns to this highlighted defense leg zone, it often becomes a key area to observe for potential reactions. As price dips inside the leg and appears to break through, it frequently creates trap-like conditions, such as a move below a bullish zone that attracts sellers before a quick reclaim occurs. Instead of a sustained breakout, we look for a structural rejection as the zone is defended. Observing retail pain inside the defense leg, often flagged by 2 or 3 alpha omegas, can signal the highest probability path toward that calculated take-profit zone. A successfully defended zone shifts the focus to one key question: where might institutions take their profits? The strategy anticipates a potential double move, the theory being that large players aim to run price roughly the same distance it took them to build their position to safely wind down their positions. Using the NinjaTrader's Fibonacci tool, by pressing F8, a projection is measured from the prior pivot right before the leg into either the middle of the defense leg. That extension becomes the projected exit zone for institutional players. Here's a defense leg setup in action. Price moves sharply in a single direction, causing the Flowmaster Delta Flagging Pro to print a massive volume spike of over 1,000 contracts. We mark the big bull on the chart so we can watch closely how the market reacts if price ever returns to the area. When price eventually revisits that zone, we look for signs that the big players are stepping in to protect their positions, like the appearance of these 3 same-colored alpha omegas. This potentially sets up a bear trap as retail traders lean short. Traders might consider stalking a potential entry. The appearance of a fib dot can act as an excellent execution trigger to indicate that buyers are in control. For targets, potential target areas can be found by using the F8 fib tool. By measuring the distance from the last major turning point into the middle of the defense leg, projecting a double move target area. For risk management is key. A stop may be placed behind the zone. A clean breakthrough invalidates the setup. Practice identifying defense leg structures in NinjaTrader's Market Replay to build familiarity with delta zones and refine your read on institutional behavior in a simulated environment. Ready to take the next step? Start a 2-week trial to unlock the full suite of AlgoBox tools and strategies. Plus, explore our 8-day bootcamp to deepen your understanding of powerful concepts like the defense leg. Subscribe now and join our live streams. See you in the next video.